Hello, everyone. Welcome to today's webinar. My name is Henry Chukwu. I'm the Manager, Consumer Protection Embedded Lab at IPA. Thank you for your time and really appreciate your presence at this event. At today's event, the primary objective of this webinar is to share the report from the digital transaction audit, digital transaction pricing audit, which was conducted by Innovations for Poverty Action in collaboration with Inclusion for All. At this event, we will discuss the key findings with you stakeholders, identify the leading issues and ways to address them. Before we start, I have some notes to share with you. This meeting will be recorded, as you already know. We would like to hear from you. Feel free to use the chat box. You can introduce yourself, your organization, and where you're joining from. During the panel conversation, if you have specific questions you would like the panel to address, please input them in the Q&A box. A recorded version of this webinar and the report of the audits will be available for download on IPA's website. Also, please join the conversation on Twitter using hashtag DFSPricesNG, tag at poverty_action, at inclusion_NG. At this point, I would like to invite Emeka Elumono, the country director of IPA, to give a quick introduction of IPA. Hi, Emeka, over to you.
Thanks, Henry. Good morning, everyone, and welcome to this webinar. For those of you not familiar with IPA, great. For those of you not familiar with IPA, we are a global research and policy nonprofit with offices in 22 countries. Our goal is to generate evidence on what types of interventions work to address poverty issues. And since our founding in 2002, IPA has worked with leading academics and experts to complete over 850 evaluations in 51 countries. And this research has informed hundreds of successful programs and impacted millions of individuals worldwide. Our work has also been used to influence international development debates on crucial investments such as microcredits and cash transfers. Next slide, please. We think of IPA's work as having 3 pillars, all of which contribute to evidence-informed decision-making. We co-create research together with decision makers and practitioners who need to buy in for evidence to have impact. And then we share the evidence that we generate strategically to the right people at the right time. And then we consciously work to equip decision makers to use the evidence to improve the lives of the global poor. Next slide, please. So IPA partners with academics and decision makers, nonprofits and governments, and together we identify pressing issues. For example, transparency of pricing for digital financial services. We then identify potential solutions and rigorously evaluate those solutions to figure out what works and why. To do this, we mostly use randomized controlled trials, which is the same rigorous method that is used in the health field to assess the effectiveness of medicine. So this particular study is an example of our collaboration with a nonprofit, Inclusion for All, on a critical topic for financial inclusion. I hope we have a very productive time discussing the findings today. Thank you.
All right, thank you so much, Emeka. At this point, I would like to invite Rafe Meza. Rafe is the Director of Consumer Protection Initiative at IPA. Rafe will share a brief on IPA's Consumer Protection Research Initiative. Hi, Rafe, over to you.
Hi, Henry. Good morning, everyone. Thank you so much for this opportunity. As Henry has mentioned, I'm the Director of Consumer Protection for IPA globally. And I just wanted to quickly give a bit of background on how this work fits into our broader consumer protection research work. Over the past 2 years, with funding from the Bill and Melinda Gates Foundation, we've launched 20 unique consumer protection research projects across the globe. And much of this has concentrated in several focus countries, of which Nigeria is one of our 4 focus countries. And we have worked with regulators, with civil society, with financial service providers to really do 2 things. One, we're developing new methods to better collect data and measure consumer protection risks. As financial services digitize, the data trails increase, and that creates a unique opportunity to understand consumer behavior and consumer outcomes at levels never seen before, such as looking at transaction level data on consumer loans in Kenya with the Competition Authority to see which borrowers are particularly at risk of debt stress, or using social media data to monitor customer complaints in the financial ecosystem. And I would encourage everyone to explore these studies at the link we've provided on this page, and to reach out to us if you have any interest in conducting research. Next slide. And the last point I'll make is just to highlight that this work that we've been doing uses a wide range of data sources, a few of which you will hear today. The first is surveys. That is sort of IPA's traditional method where we collect information directly from consumers and individuals. And so that can include in-person or phone surveys. And it's a great way to get really detailed personal information that starts to paint a picture of the overall experiences of consumers in a market. The second are audits and simulations, just like we'll hear today, where you either directly measure or replicate the types of transactions or interactions that might occur in the financial marketplace, and see how well does that meet the expectations you may have as a financial service provider, or meet the requirements the regulator may have. The third is administrative data. More and more, we've been working with large data sets with partners of ours to do things such as what I mentioned before, measuring debt stress amongst users of consumer lending, and to do segmentation. For example, we've discovered in Uganda that female customers are less likely to use formal customer care channels, even though they experience just as many problems. And so with administrative data, we can see these issues and try and address things like gender gaps in consumer redress. And finally, we're working with leading researchers to explore the use of third-party data, such as social media data or data that is collected from a phone, figuring out what these new data that have been produced through new technologies can tell us about traditional financial services. So we are a global team of really talented researchers and implementers, and are very excited to engage with all of you and to really advance consumer protection in Nigeria. And so with that, I will step aside and let this wonderful discussion begin. Thank you.
Thank you so much, Ray, for that insight. At this point, I'm really delighted to invite Mrs. Rashida Mongono, the Director, Consumer Protection Department of Central Bank of Nigeria, for a keynote address.
Yeah, thank you very much. Good morning, everyone. It's really exciting to be here. A very short keynote address so that we can get to the business of the day. Distinguished participants, ladies and gentlemen, it's a great honor for me to deliver these remarks at this very important forum. I'd like to first congratulate Innovation for Poverty Action and Africa Practice for this groundbreaking research. This study is very important to us as a regulator, as it provides new evidence on one of the most basic aspects of consumer protection, which is pricing transparency. Consumers' rights to easily access and assess and understand the costs of services they use is one of the fundamental rights of consumers. The same should therefore be expected for financial services. The research from the IPA and Africa practice provides insights on areas where we may not be achieving sufficient pricing transparency in digital financial services. The research identifies several areas which require improvement, and I trust that the results will also be instrumental in spurring conversations that will result in real changes in the marketplace. Financial inclusion can be transformational, both in terms of reducing poverty and promoting inclusive economic growth. Studies have shown that when people access financial services, they're better able to absorb financial shocks, manage risks, and start and expand their businesses. These are some of the reasons why the CBN has been committed to advancing financial inclusion in Nigeria. While financial inclusion remains a priority for the CBN, results from the 2020 Access to Financial Services Survey showed that 36% of Nigerian adults, or 38 million adults, remain completely financially excluded. Lack of trust has been established to be one of the key barriers to financial inclusion. Where pricing transparency is limited, consumers' confidence in formal financial services can be undermined, leading to low uptake and usage of financial or formal financial services. To achieve Nigeria's financial inclusion goals, therefore, concerted efforts must be made to build consumers' trust and increase confidence in the use of formal financial services. The bank is unrelenting in its effort to protect consumers and enhance their confidence in Nigeria's financial services industry, and as well as promote financial system stability, growth, inclusive growth, and innovation. Beyond working closely with financial service providers to ensure that they are complying with regulatory guidelines, the bank has also been collaborating with various industry actors in implementing financial literacy awareness and capacity building initiatives. This is to ensure that consumers are protected and their financial health is not worsened as a result of the proliferation of digital financial services, and that the financial services they are opting for meets their needs. Innovation for Poverty Action's pricing audit study provides us with insights on the reliability of financial services, the cost of using these services, the transparency of cost information, and the level of compliance with pricing regulations. We hope that this would provide a baseline for future periodic audits and support the CBN in setting standards on how and where prices are disclosed, and encouraging providers to compete on product reliability and transparent pricing. The CBN is already in the process of releasing a digital financial services awareness guideline for the industry as a measure to improve consumer understanding, good treatment, and positive outcomes. I believe that this forum will be a useful platform for stakeholders to discuss what providers and regulators can do to address the challenges identified by this study, safeguard consumers, and increase financial inclusion in Nigeria. I therefore look forward to the deliberation and recommendations on how we can better serve consumers and enhance their confidence in digital financial services. Thank you for your kind attention, and I hope this webinar will be a great success. Happy deliberations. Thank you.
Thank you. Thank you so much. Thank you so much.
A lot of noise around the cash business before and all that. So hopefully this will be sorted.
All right. Thank you so much, ma'am, for that wonderful speech. We really appreciate your presence at this event. At this point, I would like to invite. At this point, I would like to invite William Blackmon and Brian Mosingwa to give us, to share the insight from the digital transaction audit report.
All right, thank you very much, Henry. Good morning, everyone. My name is Brian Moisigwa. I'm a research coordinator with Innovations for Poverty Action. My task this morning is to share with us the introduction to the study and also share the study design that we used in implementing the study. Thereafter, I will invite my colleague, William Watmon, who will share the results from the study. So our study is titled Measuring Fees and Transparency in Nigeria's Digital Financial Services. And I would like to share 3 key insights that you may take away as your key takeaways. So I'll start with product reliability. What we found out is that if you're carrying out transactions on your mobile device, you're going to experience multiple failures. And this is especially true if you're carrying out these transactions by USSD. On pricing transparency, what we found out is that it is often very difficult and quite costly to get pricing information. And even when you get this information, it's most often going to be wrong. Then on regulatory compliance, what we found is that if you are opening up an account or you are conducting transactions by USSD, you're going to pay a fee that is going to be many times higher than the regulatory cap. I'll go ahead and share the introduction to the study. Next slide, please. So as an introduction, while we do appreciate that the digital financial services ecosystem in Nigeria has tremendously grown and greatly accelerated by the onset of the pandemic, this growth is actually being driven primarily by bank population. And this is why, because we don't see a power reduction in financial exclusion. And according to the FINA Access to Finance survey, we see that from 2018 to 2020, financial exclusion only reduced by 1%, from 37% to 36%. So our study is really basically trying to investigate 3 key roadblocks for new users joining the ecosystem. The 3 roadblocks that we looked at were 1, reliability of financial services, 2, limited transparency of cost information, and 3, the cost of using these devices. Next slide, please. So the design that we used to implement the study involved 3 key activities. 1 was on the price auditing that involved us opening accounts with 29 providers and attempting a total of about 900 transactions. And then by recording balances before and after for each transaction, we're able to make an estimate of the actual cost an end user incurs in conducting a particular transaction. The other activities that we carried out involved us reaching out to the various providers to obtain their price schedules. And this we did by reaching out to them via their websites. That this happened mostly, when we talk about websites, this happened mostly via the chat feature on the website, rather than seeing this information being displayed directly on the website. And then the other channel that we used was picking up a phone and calling the customer care numbers and talking to the person on the other end and asking them the prices that they would charge for conducting a particular transaction. And then the other avenues that we reached out were via Facebook and WhatsApp. And again, we did this to get the pricing information for the different transactions that we're doing. And all these four channels were used for every provider, and we tried to get information and compare to see how consistent that information is across the different channels. The third activity that we did was to review the regulations. And this we did by consulting 3 key documents. One is the Guide to Charges by Banks, 2020. And then the second one is the CBN NCC Joint Statement on USSD pricing that helped us interpret the pricing around USSD. And then the third one was the CBN circular on KYC requirements dated 2013 that guided our understanding about the pricing around account opening. What we set out to do, next slide please, what we set out to do was to open up accounts with all providers. What we ended up including was 19 deposit money banks and 10 mobile money operators. We excluded microfinance banks because we face a geographical limitation. Most of them required us to leave Abuja, where we are actually doing the study, to go to their offices and set up accounts via the mobile, also CSSD platforms. So those we excluded, and the other type of providers we excluded are those that gave us a little bit of a hard time when we were trying to set up accounts, even after multiple attempts. A case in point was a provider, I think, who asked us to pay an opening fee of about 100,000 naira, and also another who I think we reached out severally on their customer care to help us set up the mobile application, and that didn't work out even after multiple attempts of doing that. And customer care lines are actually costed here. In terms of the accounts that we used, the account types that we selected, we focused on the lower tier account, the lowest tier accounts that the bottom of the pyramid person would use. That would enable us to use USSD and mobile application. We excluded accounts that were restricted to certain segments of the population, as, for example, a student account. Those kinds of accounts we excluded and just focused on those lowest tier accounts that would afford us USSD and mobile application usage. In terms of the scenarios that we did, our scenarios included opening up accounts, and this happened in person, doing balance checks via USSD, and then doing on and off network transactions of 1,000 and 6,000 naira via mobile application and USSD. So this is the general overview of the methodology that we used. I would like to now invite my colleague, William, who will share with us the results from the study. Thank you very much.
Excellent. Thanks so much, Brian. And just a quick introduction. My name is William Blackman. I'm a research manager on Innovation for Poverty Action's financial inclusion team, and worked with Brian and others on this exciting research. So I get the opportunity to take us through the results, the findings from this work. And as Brian discussed at the beginning, our findings are really focused on three general areas. First, we focused on product reliability. Then we focused on pricing transparency, and finally on regulatory compliance. So to understand product reliability, we looked at the results from our audit of real transactions to understand how often transactions were successful and how often they failed. To understand pricing transparency, we compared the results from our transaction audit with the prices that we were given from customer service representatives to see how accurate these stated prices were. And then to understand regulatory compliance, we compared price caps set by the CBN with stated prices from customer service representatives, which gives us de jure or official rates of compliance. Then we also compared these price caps with the real prices from our transaction audit to understand de facto compliance or compliance in practice. So starting off with product reliability, our primary question here is to really understand how often transactions are successfully carried out and how often they fail, for example, because of network downtime or other technical issues. This is clearly an important issue. Failed transactions waste users' time. They can temporarily restrict users' access to their own funds. And these types of issues also degrade consumers' trust in financial products, which can be a significant barrier to the financial inclusion goals that were discussed earlier. So the results that we found were somewhat concerning. Only 60% of the transactions that we attempted were successful. And less than half of the transactions that we conducted via USSD were successful, or transactions conducted using mobile money operators. Interestingly, basic balance checks were actually the type of transaction most likely to fail. So then on to pricing transparency. And when I talk about pricing transparency, I'm talking about the ease of accessing accurate price information by consumers. We looked at this first by exploring how difficult it was to access price schedules from providers. And then second, by testing the accuracy of this information by comparing it against the prices we incurred in our audit of real transactions. Limited pricing transparency wastes consumers' time if they have to spend a long time looking for difficult to find price information. And then if consumers are unable to access accurate information, they can't make informed decisions about which services they want to use, which can ultimately reduce the competitiveness of the market. We found signs that pricing transparency for digital financial services is quite limited at the moment in Nigeria. It was difficult and costly to collect price information from providers, and information that we did receive was often inconsistent with the true fees that we were charged during our audit. So we first began this exercise by looking for price lists on providers' websites. But our own auditors, after conducting an extensive search on the websites of each of the providers in this study, were able to find price information on just 2 of 29 websites. We then decided to explore other channels, including calling customer care, using the chat feature on websites, and reaching out on social media. These methods tend to be slow, 17 minutes for a phone call, up to hours on average for social media. In the case of phone calls, more than 4 in 5 providers don't offer a toll-free line. And so in practice, we typically paid more to collect the information by phone than the amount of the fees themselves, 123 Naira on average. When we compared prices collected from customer service representatives with the real prices from our audit, we found many inconsistencies, particularly when we reached out over WhatsApp and on websites. We were often unable to gather any price information from customer care. And then even when we did collect information, it was more likely to be inconsistent or to be wrong than to match with our prices incurred during our audit. Finally, I focus on regulatory compliance. And we break this into 2 parts. First, we look at de jure or official compliance by comparing stated prices provided by customer service representatives with regulatory price caps. We also look at de facto compliance or compliance in practice by comparing the true prices recorded in our transaction audit with these price caps. So really our central question for regulatory compliance is whether prices customers experience are in compliance with regulators' price caps. Price caps ensure financial services remain affordable, but if these regulations are not consistently followed, the effectiveness of these interventions is lessened. Overall, we found that de jure compliance is fairly good. Customer care representatives only occasionally state prices that are higher than regulatory caps. When comparing price caps with true fees to understand de facto compliance, we found that non-compliance was concentrated around account opening, which should technically be free, and transfers conducted via USSD. Fees for USSD transactions have additional pricing regulations, and we found that these rules are quite often not followed. So as I mentioned, de jure compliance is generally fairly good, though deposit money bank customer care representatives stated fees higher than regulatory caps in 9% of cases. Mobile money representatives never stated fees in excess of the caps. Really, the larger issue here is the unavailability and inconsistency of price information from customer care, which I discussed earlier in the section on pricing transparency. Moving to de facto compliance, we see that mobile money operators, again, always complied with price caps in our audit, while 17% of mobile money bank transactions exceeded price caps. One important thing to note here, mobile money price caps are significantly higher than price caps for deposit money banks. So this may partially explain why mobile money has higher compliance. Lack of compliance is really concentrated on two types of scenarios. First, account opening, and second, transfers conducted via USSD. Account opening should be free, and in fact, none of our 29 providers charged an explicit account opening fee. However, many charged what is called an ATM card fee officially. This was necessary to begin using the account. You could not make any sort of transactions without paying for the ATM card and incurring that fee as part of the account opening process. So when these fees are a mandatory part of the account opening process, let's see. Let me mute. Okay, so when these fees are a mandatory part of the account opening process, we consider these to be equivalent to an account opening fee, which explains the high non-compliance rate for this scenario. Transactions conducted via USSD have additional regulations, which state that financial service providers may charge an extra 7 Naira on behalf of MNOs for the use of their USSD platform. We found about 1/3 of providers charged a USSD premium of greater than the 7 Naira limit. Additionally, the premium is to be collected on behalf of MNOs directly from customer bank accounts. That's directly from the regulations. Our interpretation of this language is that MNOs may not directly charge customers for USSD transactions by deducting from their airtime balances. However, we found that airtime deductions were quite common despite this prohibition. So we have some initial recommendations based on all of our findings that I just discussed, though we really look forward to hearing more from our panelists during this discussion about how these issues can be addressed. So these are some initial ideas, but really we're very open to discussion. So our recommendations, our initial recommendations, include continuing periodic audits similar to the ones that we carried out, improving access to price schedules online, and enhancing the customer care experience through instituting toll-free customer care lines and training for customer service representatives. So with that, I will turn it over to Tim Newbold at Africa Practice, who will be moderating our panel discussion. Thank you.
Thank you, William, and thank you, Brian, for the presentation. My name is Tim Newbold, and I'm the project director for Inclusion for All, which is an advocacy initiative focused on driving financial inclusion in Nigeria. And we have a specific interest in product pricing and access to financial services. We have a great panel with us today to give their perspectives on some of the key findings and to talk about potential solutions. I'm joined by Mrs. Rashida Mungunu, the Director for the Consumer Protection Department of the Central Bank of Nigeria, who we've heard from already. Mr. Benga Adebayo, who's the Chairman of the Association of Licensed Telecom Operators of Nigeria. Mr. Jay Alabraba, who's the Chairman of the Association of Licensed Mobile Payment Operators of Nigeria and the co-founder and Business Development Director for PAGA. And Mr. Adedosun Ifebogun, who is the Group Head of Retail and SME at Wema Bank. From the presentation, you'll see that the research has identified a clear set of areas of potential concern and areas where there are some recommendations for action. I want to start the conversation with the financial services providers and ask Mr. Jay Alabra, first of all, to give us his perspectives on the findings, any particular feedback from the perspective of the mobile money industry, and how you think the industry might respond and address some of these concerns. Mr. Alabra.
Thank you, Tim. I hope you can hear me okay.
We can hear you perfectly, yes.
All right, great. Hello, everybody. Good afternoon. I just want to say a big thank you to the IPA and Inclusion for All and Africa Practice, of course, for inviting me. Inviting me and AMPO, of course. There are several colleagues of mine that I know are in the participants pool. The study is quite insightful. Thanks for that also. Of course, the focus for the study clearly appears to be customers that are self-serving, as in going direct to access the services versus going through agent networks, which is a part of the business model both for banks and for MMOs. But that's a topic for a different day. But clearly, if the request here is for perspectives, I think the feedback coming out of this study is quite clear. It's very, very helpful. I think such audits are required for us to get a snapshot of what's going on in the market. So the information is welcome. Feedback is welcome. I think the industry is ready to look at it and take it on. I want to avoid appearing to be maybe a little defensive here because we are operators, but I think a few comments are needed also, just to put things in perspective as well. So while we acknowledge the points made around reliability, transparency of pricing, and potential regulatory compliance, I think perhaps some subtext or some caveats are useful just to put things in perspective as well. I mean, first of all, let's acknowledge that operators themselves have a goal to give customers a great experience so that their businesses can grow and more services will be utilized. So this kind of feedback is not necessarily if you double click on it to ask yourself, why is it happening? I'm certain that the answer would not be because the operators want to give end customers a hard time. I think there are several issues to be resolved. Some of them are, I'll argue, quite administrative and should be dealt with. Something like, visibility on pricing. I think there's quite a few reasons why wrong information may be available on websites or absent from websites. And it may simply be because people haven't thought about the fact that customers may be visiting websites to get information. But also putting things in balance, let's remind ourselves that each player, not only in this study, but each player in the market, both banks and non-banks, have a different operating strategy, right? And so there may be certain things that will differ from one party to another, which may force them to behave in one way or the other. I know we're going to talk maybe more deeply around services and reliability of services or particular services not being available on certain players, like USSD, for example, is not as robust or readily available on some platforms as it is on others, but different operating strategies. And so an apples to apples comparison across, let's call it a 29, may not be reasonable. But secondly, and I know we have our director from the CBN on, I think also keeping things in perspective here, let's remind ourselves that sustainability of business is very critical. And so certain decisions that operators may make, even where it clashes with what the central bank may view as ideal, would be because they need to, grow a business, potentially venture backed, and build a sustainable business. Interestingly, Nigeria is one of very few countries or large countries where the central bank is regulating pricing. There's a fairly liberal market for pricing for financial services in other markets. And this can be quite restrictive in Nigeria, where caps are put on pricing in cases where operators may be, operating costs may be much higher than an operator can bear staying within the cap. In fact, there's a real robust conversation ongoing around floors on pricing as well, right? Like, let the central bank also push for floors so that certain folks are not pricing below what makes sense to distort the market. Yeah, maybe just a concluding thought is around this being a very competitive market. It may be also back to the central bank, maybe too early to be too strict on pricing regulation here. But certainly the points coming out of the report around transparency on pricing and visibility, I think that's something that we must take on as an industry to make sure consumers are very comfortable that they know exactly what they're getting into when they use a particular platform before they get in. And of course, coming out of it, they, as normal, will get their receipts that show how much they paid for the service. So I'll leave it at that for now.
Thank you, Jade. That's great. And I know that the IPA team are also, I think, taking a look at the agent banking side of this equation as well. So maybe that will come in a little bit later. And I think the point around sustainability and ensuring that you get the price structures in place that allow optimal access for customers, but also sustainability and commercial operations are very important. Mr. Ifferbogen, from the banking sector's perspective, do you want to add a perspective and any immediate thoughts on the findings?
Okay, thank you, Tim, and good morning, everyone. Thank you for having me on this program. Thank you to IPA. So quickly, I will start by saying that from the deposit money bank perspective, the compliance with the regulations is uppermost in mind. Now, what that means is that for us as operators, we are much more compliant at every point in time with the regulators. What that does for us is that at any point in time, we have to put the pricing transparency at the forefront of our activities. Now, with that, it's not only the fact that the regulators are on our back, it's also on the fact that we co-package these tariffs. We are part of the decision making, and by extension, we have the interest of the customers at heart. So what that does is the fact that at any point in time, we are very much mindful of the need to be transparent with this pricing and all this. However, it's obvious that there are issues around the pervasiveness of the information that is being sent out. We have the need to have consistency of this information across touch points. The survey has identified the web, has identified customer service points, it has identified Facebook and WhatsApp for this study. Are those the primary points of contact for customers? Maybe, maybe not. However, what this is saying is that we should ensure that at any point in time, we have the consistency of this information across the touch points. An interesting thing for me, again, is around the fact that the customer service point is the preferred one for this information. So this tells us that we must consistently pay attention to how we respond from that point. We must consistently improve the knowledge base of our operators at that point. We must also consistently ensure that we have a modality for upgrading and uplifting all this information from point of view of service delivery. Just like Jay mentioned, and even as the director mentioned, we should be competing on service delivery because the prices are supposed to be fixed and consistent across board. So the key issue here would be for me around the fact that yes, the banks are complying, yet we are not able to pass the information on a consistent basis to our customers or anybody that is making inquiries. Now, the other side is the fact that we also must consider the consumers themselves from point of view of where would they want to take this information. Is that perhaps the customer service point the best? The information says something about toll-free. For toll-free to be equitable across board, I'm told there's no free lunch in Sierra Leone, in Freetown. So from the telco's perspective, is toll-free really free? Because what we have seen at some point when we are able to put toll-free for certain activities is the fact that we end up incurring the cost and the fact that the messages that are being inquired may not necessarily be consistent with what the intention is. This is debatable, but on the final note at this point is a case of us paying attention to how the informations are passed, make it consistent, and also ensure that every of the touch points are also appropriately served. With this, I would imagine that the transparency that is envisaged will be better received. And from the regulatory perspective as well, we will always be compliant with what is expected of us. I will stop at this point as we progress. Thank you.
Thank you. Just one quick follow-up from me. The extension of the customer care point. So you have a kind of, would you have a list of prioritization beyond what we've included in the study? Where would you see the most important touch points being beyond what we've included?
Okay, so from the point of view of the consumer, which we are all, primed to serve, we would need to find out where would be their preferred touch point. So for instance, they mentioned the agent point, which are available to the mass and the last mile. And what that says is that if that is where most of the people are served, that means we must also be sure of the transparency of the pricing. So as we speak today, in most agent points, you have a display of what the prices and charges will be for any transaction. And by so doing, what it means is that before you do the transaction, you're able to see what it is. However, can we control consistently what that charge will be ultimately at that point? That is another study that we must also look at. Now, from the point of view of the bank, now you would want to compare what was charged with what was said, and that is the de jure and the de facto. Right now, what we're able to do from the bank's perspective is that you see your charge on your statement. Then the next issue will be how well and how easy can you assess your statement at that point if you are the last mile. It's one thing to look at it from the maybe the urban area where you have access to data and you're able to look at it from a data point and all other touch points. And when you're comparing it with when you're having to serve for the customer at places where their only access is the USSD. And I guess by the time we take on the USSD side of this business, we can also look at some of those areas that we need to improve on. And this has to be a collaborative effort, no doubt about it. Because at the end of the day, we are all serving the same customer. Thank you.
Thank you. Jay, I know you wanted to come in as well on that point. Do you want to just...
Yeah, if I could just piggyback on the points that Dr. has made. I think, he did mention agent network being a place where people can visit to even understand the services that are available outside of the agent network in the app or whatever, and get a sense of the pricing. But also there are many reasons why pricing may change over time, right? There may be, just lack of a better term, there could be promos, there could be, modifications to pricing, etc. I think it's valuable also for customers to be ready to view the pricing when they're ready to interact with the transaction channel, right? So if it's web, for example, there should be pricing available in the flow to say, well, this transaction you're doing is priced at this, right? Or in the app, your tooltips, etc., will serve there. Back to this point about incorrect pricing being available on websites, etc. A lot of stuff is cached online. I know with our mobile money business, which is Paga, I know that there are some pages that are cached on certain sites that have pricing that's ancient, right? Or old posters that are kept at agents that have pricing that is incorrect. I think some of those things can be cleaned up over time. I think the feedback again here is really solid. We can deal with that. But I just wanted to tackle one point Dotun made. Dotun was a good friend of mine. He incorrectly heard me say that because I didn't say that pricing should be consistent across players. I do not think pricing has to be consistent across players. Each player has their own business model, their own focus. In fact, I would lean more in the direction of liberalization of pricing where various factors are put into it and let market forces come to play, right? You choose the service you want to use. If you like the service, you pay the price. I just wanted to throw in that point.
Thanks, Jay. And you preempted a question we have on the Q&A anyway, who was asking around harmony of pricing across the country. But we also have a question on the Q&A, Mrs. Manguno, for the CBN, which is just to get your reaction on how the Consumer Protection Department is absorbing these findings and your own perspectives on them. I think you're on mute, so I may need to have someone unmute you. There you go. Yeah.
Yeah, thank you very much, team. Good morning again, everyone. We particularly want to thank the IPA for making this platform available to us in the CBN. We've been doing a lot of work with the IPA, and the good thing is that whatever they're doing is always backed with data. So, and the focus of their study this time around, which was on product reliability, pricing transparency, and regulatory compliance. If you look at the focus, all speaks to directly to the issue of consumers, to what was the impact on consumers. And for us here, we're concerned about the consumer protection issues. For us as regulators, financial system stability is one of the core mandates of the central bank. I know one of the speakers talked about sustainability of business, indirectly, what every business or every financial institution is there, to make profit. Yes, the central bank is very much aware of this, and that's why financial system stability is very, very core to what we do. But in ensuring financial system stability, it's all-encompassing. It has to be holistic, not only from the side of the financial institutions, but the users themselves. So we kind of have to balance the need for the financial institutions to make profit and be sustainable, because it's important to us and to the economy, and then to the consumers who are actually going to use these products. How are we going to ensure that they're aware of their rights and responsibilities, and that they go into transactions, with their eyes closed, if I can say that. So I know a lot of regulations. We have tried to ensure that this is done by not only relying on the CBN Act or other statutory regulations, but by bringing out frameworks and guidelines to help the operators and the whole ecosystem to be a guide to our behavior. For us, we have issued the consumer protection framework, and also to give effect to that framework, we have the consumer protection regulation, which is to guide issues around pricing, transparency, disclosure, fair treatment, of customers, competition, and even enforcement. In the case where you don't comply with the regulations, these are the sanctions that are, that are going to be meted out. And most of these regulations are also not, I know my colleague from Wema Bank also said it, it's not one-sided. It's usually a collaboration between all the stakeholders in the ecosystem. Before they are issued, we have, they are exposed to the industry. So we agree, even consumer advocacy groups, institutions like the organizations like the IPA, at different times, and others are also consulted so that we can have a harmonized view of this. And on pricing particularly, the CBN also issued the Guide to Bank Charges in 2020, which will form the basis for charges, allowable charges for transactions, for products and services, and even when any of those charges are not there in the guide, and the financial institution has a responsibility to escalate to the CBN for approval, in such cases. And on disclosure and transparency, it's a very, very important Section 4 of the CPR, the Consumer Protection Regulations, explicitly lays down a lot of guidelines for financial institutions to follow in displaying and informing their customers on the charges applicable when it comes to their lending rates, deposit rates, even exchange rates, and even adverts. When you're introducing new products or services, it behoves on the institution to get approval from the CBN. The reason why the bank puts oversight on such is to ensure that consumers are not unduly lured into going into transactions that they're not very well aware of. We know that the environment that we're operating in, Nigeria, we know, yes, we always want to follow best practice, but we have our peculiar issues, a nation of 200 million with those educated people. I'm not really sure of the percentage now, but we know that our financial inclusion strategy is closely related to that. We have a target of 95% by the year 2024, and access to credit and access to formal financial services is very critical to us achieving it. So we have to go the extra mile to ensure that we're able to bring this sector, this informal sector, which holds a very large percentage of the Nigerian economy, into the financial services industry. And I think the USSD has also played a very important role in this. Everybody has a phone, so access to finance, the idea and the objective behind it was to make the USSD a veritable tool to be able to get to those areas that the deposit money banks would not necessarily be able to open offices. Is very costly. So, all these things could really get to their bottom line, like they could always say. But if we are not transparent about it, and we charge unallowable fees, or they are even, we see cases of double charging in some cases. The telecoms charges the 6 naira 95 kobo, the bank too takes 50 naira. Some of them are only out to transfer 500 naira, 1,000 naira. So it really matters, a lot to them. So we really need to balance, sustainability, that's making profit, with consumer rights, if I can call it that. Because at the end of the day, if we have the millions of accounts and the users are not really, we want them to stay to remain in the financial, formal financial sector, not to open accounts and then they're not active. The important thing will be with them to remain within the formal financial sector and be able to see the benefit of remaining there.
Absolutely.
Thank you.
Thank you very much. And you gave me a nice segue into my next topic on USSD. But before I go into that quickly, I just want to encourage anyone who's on the call who wants to ask any questions of the panelists, just to put them into the Q&A, and we'll have a quick session shortly on any attendee questions. But before then, just jumping to Mr. Adebayo and the question of infrastructure and USSD. As you'll have seen, one of the findings in the survey is that there are some infrastructure challenges in terms of reliability of transactions. Could you give us your perspectives on that, what you think some of the issues might be and how we might address them to get the numbers up?
Yeah, thank you for having me, and good afternoon, everyone. I also must join in commending IPA and African Practice for putting this forum together. Nice presentation, and it's good to hear the feedback from the consumers. On the USSD and the availability of services across the country, I must say that a number of sites across the country are connected on 3G networks. A few sites are still on 2G networks, and therefore sites that are on 2G network will not necessarily have reliable data access. A number of people that uses the USSD are people who are not based in the tier 1 or tier 2 cities. And so naturally it will impact on the access to good quality data network. A number of people in the cities do use feature phones, and so they will not necessarily feel the impact of quality of service on those at those ends, because if it's not working well on the feature phone, you can always use the smartphone and the rest of it. But it speaks to a bigger issue. In the first instance, I think the pricing for USSD is not very transparent. The bank has told us that it is not a chargeable banking service, and so they don't intend to make money from USSD transactions, but the reality is otherwise. In our understanding with the bankers committee, committee of bank CEOs, we did agree that it would be a rate of 699 kobo that would be deducted from the consumer accounts, and that would be remitted to the operators. The banks did assure that there will be no further charges on the users for USSD service, but the reality is otherwise today. And so this transparency on precious USSD, we think has an impact on customer confidence. We also think has an impact on availability to provide good grade service in certain parts of the country, because as you may have followed media reports, the outstanding due to operators from the banks today stands at several billions of naira. Well, that's a different subject matter for another day. The other thing that I must admit is that a number of the sites in the tier 2 cities and their tier 2 and tier 3 towns are not connected to the national backbone, and meaning that those sites are connected via radio. Radios are sometimes susceptible to changes in weather, and so if you have people who are at that end of the network on that last mile, they may have problem of access to good quality infrastructure. And there's a need for expansion of our network across the country. It's getting more and more difficult to obtain infrastructure build approval from local authorities. Unfortunately, Abuja is one of such places. You may have noticed the grade of service in Abuja is really poor, not because we don't want to provide good quality service, but this is because authorities at the FCDA will not grant the access to expand the infrastructure in Abuja. These are part of the experience that we have across the country, and I know that one must admit that it certainly does have an impact on good quality services across the country. There are a few strange cases in some other parts of the country that are not necessarily known, but it does have impact on good quality service. Some remote sites are easily vandalized because of the problem of our public energy supply. We're all aware that a number of homes run on inverters. Now, because of this, access to need for backup batteries have become more. The market for batteries has become quite large. And so when sites are vandalized, there's still batteries on those sites. Other than stealing diesel fuel, batteries are easily stolen and are sold to the secondary market. And these end up in some people's homes on their inverters and the rest of it. When that happens, it impacts on not just that particular site, but also neighboring site because of heavy load of data and all of that. In some cases, we have locals entering to the said site and then having illegal connection from the power station to their homes. A number of times the sites are overloaded, generator go down in the middle of the night, diesel, UPS battery already stolen, so sites go out. So you come in the morning, you have some form of coverage, but you don't have the right coverage to deliver voice and data services. This also has an impact on quality of USSD in some part of the country. In a nutshell, this is it. I would like to respond to other questions if there be any more in that regard. But I join again in thanking you for putting this together, and thank you for having us on this call today. Thank you.
Thank you, Bengo. And it's clear there's a range of issues here, but I just want to put the USSD question to Jay and to Dotun. Jay first, perhaps. How can we improve the handshake between financial services and telcos, and how do we get that working? Because ultimately it's the customer that suffers if it doesn't work.
Yeah, and this shows up on two levels, right? There's the technical aspects and there's the commercial aspects. there are many layers to this thing, somewhat political in some cases. So there are things that I am not privy to, but I do know that the dialogue has been ongoing for quite a while. In fact, some of the information referenced in the reports, I think is coming from a press release or at least a newspaper article, and not even a formal directive or memo from NCC or from the CBN. So I think conversations need to be concluded. We trust that that hearts are in the right place, right? Both at the NCC and the CBN and the telcos and the financial services operators. And we just hope that the conversation continues and comes to a conclusion that's right for the customer.
So, Dotun, anything on your side from the bank?
Okay, it's obvious from what.
Sorry,
maybe I'll respond after Dotun.
Thank you. Thank you.
Okay. It's obvious that there's a lot on the plate of the telcos from what Benga has shared. I empathize. And it looks like everything boils down to power and around the regulatory side of it. And we're all suffering. So again, it's about how best we can also attack this issue. So if power is an issue, and we have the theft of inverters and stuff, it's also limiting the ability to switch to solar, because solar would have been a ready option. But of course, as it is, that solar also needs to be supported by inverters. Be that as it may, I guess we need to also start looking at this from point of view of some agreements. There should be minimum agreeable deliverables that we can have as operators, because we just have to look at it jointly for the benefit of the customers. If that is in place, then possibly this issue of pricing that has been on the table for a while would be better managed. Benga mentioned the protracted cost that has been on the table. I think we need to take a view around this cost going forward. In terms of being able to consistently apply the cost, I guess it's a function of the banks also putting all their structure in place for picking this charge from customers' accounts. And one thing that we have seen is around the fact that for you to call up this service on the USSD, you must fund your account. From where I stand, no customer will be able to do this if the account is not funded going forward. What that also means is that you limit the transaction. So it's a case of catch-22, what goes first? From bank's perspective, we are trying our best not to further pile cost on the customer, but at the same time, we must also ensure that we don't have the short end of the stick. So it's an ongoing thing, it's an ongoing debate. The USSD has come to stay. The USSD is a preferred one for a larger population, particularly the last mile, and we just must make it work. And I believe collectively, we can come to some agreements to support all the technical issues and the operational issues from the bank's perspective. Thank you.
Thank you, Dotun. So, Mrs. Mungunu, I know you wanted to respond. I wanted to just put
yes, Tim. I was just going to respond on the.
Could I ask one specific? Could I ask one specific question just to guide that?
Yes.
Jay intimated that there is perhaps some ambiguity as to the specific status of the regulatory guidance on USSD. Is the 698 charge a formal regulatory approved, CBN approved charge for USSD? And what's give us your wider perspective on this?
Yes, the regulatory ambiguity, like he inferred on USSD, I think that it's an ongoing conversation. And I think it has to be a multi-stakeholder, we have to have a multi-stakeholder approach to this. I know the CBN and NCC have an ongoing conversation on this to agree on a framework that will be agreeable to all, because there's the issue of who is going to bear the costs, for the USSD. Is it the bank, is it the customer, or the telco? So I know that we have a framework for USSD transactions, which speaks mostly to pricing and regulatory compliance. So, but the issue of reliability, I think would be more, for the telcos. So for the pricing, I know the 6 naira 98 kobo is the amount that is chargeable for USSD transactions. But there have been cases where some banks charge 10 naira, some charge even as high as 50 naira. And the CBN as a regulator hasn't, we didn't sit down to watch that happening. As part of our regulatory compliance, some of the tools we go for compliance examinations and also validation visits to these banks. And we have seen these cases of infractions, and they are made to refund. We have a sanctions regime, whereby we make them to refund to the customers. In fact, there was a refund of 14 million very, very recently by one of the deposit money banks. And we issue penalties as well. So where we have established such unallowable charges on the part of the banks, not only in terms of pricing, even in reliability, where we have failed transactions and the customer was charged despite that. So the central bank has been living up to its responsibility in that area. Things could be better, that's why I said we should have a multi-stakeholder approach to this. And I think the CBN has been taking a leadership position also on that. Thank you.
Thank you. I'm just going to turn quickly to a couple of questions that we have on the Q&A. The first one, I think, to you, Mrs. Mungunus, while I still have you on the line. The question, and I think Jay's alluded to this and Dawson's alluded to this, around flexibility of pricing based on geographic location and the ability to ensure that you're pricing based on market conditions. I appreciate it. It's a large country. There's 200 million people. It's many different locations and a complex environment. So, is that a consideration when price guidelines are set? That you might be able to charge more in harder to reach locations, for example, and to a certain extent, how does that impact the fact that in those locations consumers are most likely to be poorer and therefore potentially less able to pay? Is that something that you consider in the price guidelines?
For the central bank, like I said earlier, we're operating in a peculiar environment. And for us, our vision is to be a people-focused central bank, promoting confidence in the economy and enabling an improved standard of living for the people. I think we are not sophisticated enough to, at this point, to have different pricing for different locations, or for, depending on who the telecom provider is, which means, mine is 20 naira, for instance. If it's good enough for you, use it, because that's what I think he's saying. No matter how good the service is, if you don't have customers, if you don't endear customers to it, the kind of customers that are available to you, I don't think that would all go well. And why are regulators here? Yes, it may be good enough for you because you make profit in the urban areas, but the responsibility of a regulator, especially in our society here, when you look at what the government and the central bank is trying to achieve, is to ensure that everybody, no matter the class, whether rich and poor, are able to access financial services at a cost that is reasonable for them. So I think that's the only way we can achieve our financial inclusion target come 2024. We're already lagging behind. So I don't see this kind of policy to assist in any way.
Thank you.
Yeah.
Thank you, Mrs. Ngudi. One more question on the Q&A, and then I think I'll turn to some summary points from each of the panelists. But Mr. Adebayo, there's a quick question on USSD, which is the interpretation, I think, of the 6998 charge and whether that pricing regime is in place for all financial services providers or just for commercial banks. Is that something you can address?
Yeah, in our understanding with the CBN and the NCC, 698 kobo is set as a benchmark for USSD charges, and that should be applied on a non-discriminatory basis. It's not only the commercial banks that should benefit from that. So if you have any of the players asking for more than that, I think to be guided by the memorandum of understanding that subsists, and that says 698 kobo, absolutely on a non-discriminatory basis.
Perfect. Quick answer, easy. Thank you very much. I'm conscious of time, and I want to just give each of the panelists an opportunity to quickly make any final comments they want to make and give us what you think the most important steps that we could take from now are. Starting with Jay, if you don't mind.
Sure, thanks, Tim, and great job moderating. Good meeting you again. I'll maybe take this my 30 seconds or 1 minute to just echo a point that Mrs. Monguno made, right? This conversation around all these issues being multi-stakeholder conversations to be had and resolved. You know, there are details about the operations or the concerns of particular groups that may not be clear to others. I have to say that the central bank, the current central bank that we deal with is a listening bank, and reasonable arguments are considered before final decisions are made. So we want to continue that type of dialogue with our regulator, and of course bring other stakeholders to the table, right? The NCC and Alton and other parties, so that the right decisions are made ultimately, taking into account all perspectives. Because ultimately, you know, we're all the central goal here is to provide great services to customers and to advance the nation. So I think we have a shared responsibility to make it happen.
Thank you. Agreed. Dotun, just quickly.
Okay, thank you, Tim. So just on the back of what Jay has said, we need to extend this also to the ultimate beneficiaries, which are the consumers in this case. Right now, we've been able to view this report from the point of view of the umpire, like an IPA. At the end of the day, we must also incorporate what the consumers want. What do they want? How do they want to be served? If we understand where and how they want to be served, it helps us to also manage this issue of pricing. It may be difficult to have price differentials across points, but it's also necessary to understand what it takes to serve. And we also must know the willingness to pay across those other areas. Be that as it may, it's not a ready answer, but it calls for more and deliberate actions on the part of all stakeholders to get this done. And I think what we are doing today can be taken forward from point of view of a further review, further improvements around the beneficiaries at the end of the mile. And at the end of the day, we would consistently have some dynamic approaches to making this work for the entire economy. Thank you.
Thank you, Dustin. Mr. Adebayo, any final comments you'd like to add?
Yes, and once again, thank you, Tim. It's back again on this USSD thing. I think that the banks need to be a bit more transparent. And I think also that the banks should honor their obligation to the service provider, the network operators, as due. We have an understanding that has been signed since 2021. We're still on it till now. We really cannot say that this has seen the light of day. But as an industry, we are committed to financial inclusion. We're doing all that we can, and we'll continue to do so to support all the stakeholders at all levels, being the infrastructure with the widest coverage of the country. So, but we're concerned about the relationship with the banks on the USSD and the understanding that we do have. And I think this has a lot of impact on access to financial inclusion using the USSD. Thank you very much.
Thank you, Benga. And I think it's clear that more conversations are needed around USSD. Mrs. Mangunu, can I leave the last word to you? Any final comments to wrap up?
Yes, thank you very much. The comment from the last speaker, we're very concerned about the relationship with the banks and the operators, and we'll implore them to continue to cooperate with the central bank on this journey so that we can all agree on a agree on a framework that will be favorable to all, because at the end of the day, engendering confidence in the economy is most uppermost, because that's what will drive adoption of whatever product or service that whether the banks or the telcos are introducing into the market. And that would, again, by extension, help us to achieve financial inclusion and at the same time financial system stability. We can see that the telcos are also gradually moving into the financial sector with the licensing of the payment service banks. So I think we should, when we're making our case, the telcos should also be very careful in thinking maybe the deposit money banks are trying to, stifle their operations, because at the end of the day, I think the market is big enough for all of us. It's a huge market. So it's just for us to try and work together. Thank you very much, IPA, for providing this platform. And we will look forward to more conversations on this. Thank you.
Thank you very much. It's clear there's a need for more conversations, more discussions, open floor and places where people can come together and talk and to listen to the views of the consumer and ensure that we're addressing their needs and their demands. Thank you, everybody, for the discussion. It's been a pleasure. And I hope I've addressed as many of the questions from the panel, from the audience as I can. But I'll hand back over now to Henry to wrap up and close up. Thank you. Henry?
Thank you so much, Steve, for that wonderful session. It's really thought-provoking. It's Emeka to give a closing remark. Thank you so much. Thank you, everyone.
Thank you.
Great. Thanks, everyone. It's been a really engaging discussion. And on behalf of Innovations for Poverty, Action, and Inclusion for All, I would like to thank everyone for your participation. Particularly the Director of the Consumer Protection Department, Mrs. Mangunu. We really thank you for taking the time to participate in this event. I think it clearly demonstrates, thank you. It really demonstrates the CBN's interest in this topic and commitment to it as well. And I'd like to thank the speakers for their excellent and thought-provoking insights, which are really enriching to the conversation. And Tim, the session moderator, for organizing and animating the session and keeping things both under control and on time. To Brian and Willie for your presentations, thank you very much. And most importantly, to the participants, thank you for joining, and your questions and inputs were really critical for making this a success. The full report and a summary are available online. Please look in the chat box for the links to both of them. And as discussed today, there's still some work to be done to enhance the service delivery to consumers of digital financial services and to close the gap for financial inclusion in Nigeria as well. Clearly, this was cited many times as requiring multi-stakeholder approach, including the policymakers. And on our part as IPA, we are committed to supporting the industry through the provision of high quality evidence to address key issues, especially around consumer protection and financial inclusion. So we're open to discussion opportunities for collaboration. Please feel free to reach out to us. Thank you and have a pleasant day.
Thank you.
Thank you.
Have a good day. Yeah.
Thank
Bye-bye.
you.
Thank you,
Bye.
everyone. Thank you. Thank you. Bye.
Bye-bye.